We're covering specialty property coverages for the property and casualty exam, focusing on why risks like earthquake, windstorm, watercraft, and mobile homes require special handling. Standard homeowners policies are designed for common, widespread risks, not unique or catastrophic ones. Insurers exclude these high-risk exposures to avoid adverse selection, where only those most likely to suffer a loss buy the coverage. And to manage potentially catastrophic losses that could bankrupt the company. For the exam, you must know how these risks are added back or covered separately. Let's start with earthquakes. The standard homeowners policy excludes all earth movement. To get this coverage, you need an earthquake endorsement. The two most tested points are the definition of a single occurrence and the deductible. All earthquake shocks or tremors within a 72-hour period are considered one single event, triggering only one deductible. This prevents an insured from facing multiple deductibles for a main quake and its aftershocks. The deductible itself is another exam trap. It's not a flat dollar amount, but a percentage, typically ranging from 5 to 20% of the coverage A dwelling limit, making it a substantial out-of-pocket expense for the insured. Windstorm is usually a covered peril, but in high-risk coastal areas, insurers manage this catastrophic exposure by using a separate windstorm or hurricane deductible. Like the earthquake deductible, this is typically a percentage of the dwelling's insured value, often between 1 and 5%. For the exam, recognize that this is a tool insurers use to keep coverage affordable in areas prone to massive hurricane losses. Watercraft coverage in a standard homeowners policy is extremely limited, and the exam loves to test these limits. Typically, there is only up to $1,500 property coverage for damage to the watercraft, its trailer, and its motor. Liability coverage is also restricted, generally only applying to small boats with low horsepower, like an outboard motor of 25 horsepower or less. Anything larger or more powerful requires a separate boat owner's policy or a watercraft endorsement for adequate property and liability protection. Mobile homes also present a unique risk because they are highly susceptible to wind and fire damage and are not permanently affixed to a foundation in the same way as a traditional home. They are not eligible for a standard homeowner's policy. Instead, they are insured on a specialized mobile homeowners policy, which is often a modified version of an HO2 or HO3. These policies can cover the structure, personal property, and liability, similar to a standard HO policy, but are tailored to the specific risks of a manufactured home. Finally, farm risks are excluded because a farm is a business. Homeowners policies explicitly exclude coverage for business activities. Farm structures like barns, equipment like tractors, livestock, and the commercial liability associated with a farming operation require a dedicated farm owner's policy. Here's a phrase to help you remember why these need special treatment. For a home that can shake, float, or roll, a standard policy is not in control. This links earthquakes, watercraft, and mobile homes to the need for endorsements or separate policies. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.